Good morning. Welcome to our podcast series, Wise Tech for Wise Money. Today we are discussing markets transformed, the changing world of multifamily offices and wealth management. Today's podcast we chat about the world of wealth management and how it's changing and what that means for the people in it. I'm Gary Wayne from A1 Solutions International. We partner with financial services leaders to help them navigate the evolving landscape of AI, process compliance, risk management and marketing, and scaling their business. Today we're diving into the world of multifamily offices and wealth management, how it's evolved over the past few years, the real world challenges leaders face and what the future might hold. We'll also do a bit of future gazing. If we could wave the magic wand and fix one big thing in the industry, what would it be? And even if it's not a big focus today, how AI may one day help or get in the way. I'm joined today by Abhineet Rai at Rai Wealth Management. This podcast will take approximately 30 minutes and will be recorded. Thanks for joining us today, Abhineet. We'll start by hearing about your background, if that's okay, and your journey on how you ended up running and setting up Rai Wealth Management.
Absolutely. Well, thank you, Gary, for inviting me for this podcast. So my story goes back almost 30 odd years ago. My career started outside of the industry, and I come from a defense services background. And having trained in India many years ago in a different life at that point of time, I finished my training in what's called National Defence Academy, very close to what we have here in the UK as Sandhurst, and in the US West Point, those who understand the forces. And so after training, and I came out of it, wasn't getting fighter flying because of various medical reasons. I did my MBA, and then did a few jobs in India as well, worked with an FMCG company, a fast-moving consumer goods company, a tire company, and then finally got into banking when I joined HSBC. And then I worked with HSBC for 10 years, 5 in India, and then I got seconded and came here in 2005 with HSBC as heading NRI services, which is non-resident Indian services. And a couple of years with them in the NRI services business, and I decided for me to be able to provide wider product and services, I need to look at a wider client base, because NRIs obviously is a small client base in the UK, so about 2% of the population. So I decided to move from NRI services to HSBC's private bank. So my journey of private banking and wealth management began predominantly sort of around 2005. And since then, I've been basically, managing high net worth individuals, initially with HSBC Private Bank, and then I moved over to Bank of Singapore, which is a Singaporean bank, as the name suggests, with its parent bank being OCBC, or Overseas Chinese Banking Corporation. I was based in London itself. And then I jumped over to Credit Suisse. So I worked with Credit Suisse till about 2016. And 2017, I moved over to help an Indian businessman set a family office here in London, and we were doing 4 things in that. We ran a business called Banyan Tree Wealth. I joined them as the CEO for the UK business. We were based in Mayfair. So the 4 things that we were doing wealth management, obviously, so managing some high net worth clients, and then we went on to set up a hedge fund, volatility arbitrage hedge fund. We got a trader who joined us from UBS. We were doing a bond trading business as well, so we had a bond trader who had joined us. And the last and equally important for us was a bridge finance business. So the principals had a bank in Mauritius. Using the bank's balance sheet, we were doing a lot of bridge finance in the UK as well. So we were sourcing the deals. The lending was actually done by the Mauritian bank. That continued till about 2020. But unfortunately, as we were talking prior to this, call, COVID hit the world, and large institutions and businesses supported employees and people to continue to work during that time. But I appreciate that smaller businesses had this sort of concern about what will happen to the world, etc. And so finally, the Banyan Tree business came to a close in 2020, whilst we had actually turned the leaf and we became profitable then. but it was the principal decision because obviously they weren't sure about how the business is going to go further. And so at that point of time, I decided to join St. James's Place because they had been after me for some time. So I signed up with SJP, a large enough and reputable institution in the UK, and worked with them for about 3 years till about 2023. I had set up my company in 2019, so it's been now 6 years since I've been running my own business. But there I joined as a partner practice of SJP. Um, but I realized, having joined SJP, that their offering was rather limited for the client base that I was handling. A, and B, the fee structure was a lot more complex than many of my clients were used to. And C is a lot of my clients being high net worth individuals did have real estate as part of their portfolio and asset mix. Consequently, they needed property loans, and SJP did not offer any of that because obviously they're not a bank. Yes, they have tie up with various lenders in the market, but these are high net worth clients and they have complex requirements in terms of funding, which could not be met with those high street lenders or alternate lenders in the market. So ultimately, I had to decide which way to proceed, and then I decided to sort of cut my ties with them. It was mutually agreeable to both sides. And then for the last now 2 years, I continue to run my own business, but handle the same high net worth clients. And I work with them on limited power of attorneys, and they manage, or we manage their investment portfolios in various private banks. So that's what my journey has been so far. Along with it, we do some structured finance and we do lending business as well ourselves. But that's a different business with a couple of my other business partners, where we arrange funding through institutional money that we mobilize, and we lend through some of our other platforms, which we are. And that sort of business is also growing. And so I don't manage a lot of clients, but it's high value clients generally is what my focus is on.
Sounds fantastic. I mean, sounds like a business I wish I could have got involved in had I had my life again. Very varied, everything I'm interested in. How over the last few years has the industry changed, and what challenges do you face providing this service today?
So I think over the last few years, and I probably would say over the last decade as well, I would say, I think um, the challenges that industry is obviously faced is greater volatility in the market. So with A, COVID coming in, B, change in government in US, the tariff rhetoric that has been happening, geopolitical issues, etc., have resulted in a greater amount of volatility. Between 2010 until about 2020, just after the global financial crisis, it was a rather smooth run with interest rates being very low and everybody thinking that the world is a very simple and easy place to be living in, with interest rates remaining low, and you could basically close your eyes and invest and you could still make money. So that's been fine. But if you go back from sort of 2018, 19 till perhaps now, so 8, 9 years, whatever, things have become different. It's not as straightforward as it is. So, the markets have changed to that extent. Volatility has become greater. Interest rates have moved up, has had a difficult impact for various businesses, real estate investors, and even corporates, because the cost of funding has gone up over the last 2 years, that is. The other element which has changed is in terms of regulatory requirements. So, going back maybe 10 years ago or 15 years ago, business was a little bit more simpler to do. You had obviously had to have the relevant qualifications as an individual, and the institutions need to have a certain amount of controls over them. But I think the regulatory regime has become more onerous over the last sort of 5 years at least, and it's becoming more and more difficult now. So while we are in a situation where we want to provide more products and services and provide better solutions to various clients, I think the effect of trying to get compliance sorted out has resulted in many advisors either cutting corners or then perhaps not providing the requisite quality of products and services which should have been offered in the first instance. So while we want to be as compliant as possible, the fact that you have so many layers which are there is resulting in many of these advisors, who are good advisors perhaps, walking out of the market and going there. And lastly, I mean, the UK and European markets have become a very high tax regime, and consequently, a lot of investors are looking at other markets to start looking at going overseas. And I mean, we are all aware of it. I mean, Asia has been a growing market, Middle East has been, so a lot of people have looked at moving away from UK. So that's just a tax issue, which has nothing to do with perhaps financial services, but generally in the industry or in the markets where taxes are driving people away. So, there's more taxes coming in, I guess, in the next 3 months or 6 months, as Rachel Reeves might announce. So that's another area. So I think three aspects which I've noticed: volatility due to various reasons, regulatory regime which is impacted in how people are managing their wealth and how investment advisors coming into the market, and perhaps tax related issues and growth related issues in UK and Europe is resulting in a lot of people moving into perhaps into Asia, emerging markets, and other countries as well. So yeah.
Can you expand a bit on the regulatory burden? I know you're unregulated, but how does that spill over to you from whoever provides for regulation? Is there an immense amount of paperwork that you have to go through even
Yeah.
before you get to KYAC and AML and all that?
That's a good point. Yes, I think the regulatory regime has made it so much more onerous. While the thought process is good, I mean, in terms of trying to get the right advisors on board and to get people doing the right advice to clients. But if you make it so difficult for advisors to be regulated and the processes to be so regulated, that for you to, as an advisor, to be able to actually provide the requisite production services, you've got to get so many more papers signed up by clients and reports to be given to them over time, that it is making it more and more difficult for the right advisors to come on. And a lot of advisors are saying, can I move into a jurisdiction which is a lot less, paper intensive, or and actually do the right thing for the clients and move on with it. It's almost like, I mean, how do I explain it? Maybe if you go to a doctor, for example, and we ask a doctor, I mean, we are going and talking to a doctor and getting your medicines and getting a diagnosis and whatever else, and that's fine, and you move out of it. But here, it's not just about doing it, but also recording it and ensuring it's kept for a certain number of years, and to justify, and the regulators' reports to be submitted and queries later on. The paperwork that comes along with it, and the regulatory regime and the onerous systems that we have set up on ourselves, is becoming more and more important to work upon, rather than actually to focus on providing the better product, services, and advice to the client. So that's one area which I think is resulting in making life a little bit difficult for many advisors. And many advisors are hence saying, is this what I want to do, or can I do it in a manner which is taking away all this pain away? So that's why sometimes consolidation seems to be happening in the industry, which one could argue is good, but can also argue that perhaps everybody is being packaged and given the same thing. That I
Do you feel?
see,
Oh, go on,
yeah.
go on.
So that I see as something which takes away the benefit of a good advisor to provide good advice, rather than basically to say, fine, we're dealing with an SJP or a Quilters or whoever else is there in the market, and they're providing packaged advice and a packaged service. So everybody seems to then get only the same product, same service. So everybody is going up or going down simultaneously. Whereas if you had a little bit of flexibility in what you can do, you may be able to get a lot more nuanced performances for investments for different types of clients. That sometimes seems to be missed out because, I mean, I'm ultimately like an IFA, I operate like an IFA, so I have my opportunity to be able to provide my own sort of interest in various aspects of investments. But organizations which are more sort of structured will provide a structured solution, a structured advice, and resulting in everybody seems to get the same kind of production services and no nuance towards their particular returns.
I've talked to a lot of people recently in different fields, your field, other areas of the marketplace, and it just seems the SEC, the FCA, regulatory burden is actually preventing people from being creative, they're taking away the talents that you once hired to make your business and your investments and your opportunities more viable. And it's actually just making the opportunities much more difficult to achieve.
You're right, you're absolutely right. And because of that, actually it's the perhaps the common man or the retail investor who's at times losing out on actually getting better returns from the market because he or she is unable to access some of the products and services which are now being focused and being targeted at the higher net worth clients. I mean, I'll give you example, private credit as a case. Private credit has now become, I mean, it's now sort of being packaged and sold to retail as well. But going back maybe 2 or 3 years ago, was something which was available to high net worth investors. Private credit is essentially lending, private client money and getting a higher yield rather than what ultimately happens is you put your money in a bank and deposit it, and the bank lends out, and the bank makes a higher margin on the lending versus the deposit. Instead of doing it via a bank, you might as well be able to do it yourself by actually lending it. So that's private credit in a nutshell. And there are platforms now which are offering that, whether it is a fund or whether it's lending directly through yourselves or some structure. So private credit is a big market now. It's providing a much better return to various investors. That's one example. Structured products is another one. Structured products offer participation in the equity markets with having a downside buffer protection. So how good it would be for an investor to say, okay, fine, I'm investing in the stock markets. I'm not investing in only a particular equity, but I'm investing in say NASDAQ 100 or a FTSE 100 or a basket of different indices. But I don't take a downside risk if any of the indices fall by about 30 or 40%. What's products called a reverse convertible. I'm benign to the market's movement up or down as long as it doesn't fall below 30 or 40%. And yet I'm getting a fixed coupon. I'm getting maybe 6 or 7% returns. So I'm getting a 6-7% return. That is a guaranteed. If the market goes down by 10%, I don't really care. Market goes down by 20%, I don't really care because my money is still guaranteed. Capital is guaranteed. And these are issued by various large institutions. I'm not talking about somebody making this is by a RBC, a Goldman Sachs, a JP Morgan, or whatever else, HSBC. So these are big institutions are doing it. So as an investor, I have an opportunity to participate in the market, still getting a 6-7%, 8% return, better than a bank deposit, double than the bank deposit rates, and yet not being worried about the markets going down, and hence these kind of products unfortunately are not available to retail investors. So the market's sort of fragmenting. The poor get poorer, the rich get richer is what's happening in a sense because of all these issues.
The world seems to me to be on its head. I mean, if you're rich, you pay a lower interest rate, you can raise money and get loans. If you're more hard up, you pay a higher interest rate, which makes you poorer, and you can't get finance anyway.
Totally agree with you, Gary. Totally agree. That's the truth of the matter. In fact, I might as well say banks, and even for private clients, they end up closing the umbrella when it starts raining. And the moment it's bright and sunny, they come up with your umbrella. So when somebody needs some money, I mean, I'm in the transaction right now. We're doing some for a UK business who's in the pharmaceutical industry. When they need the money and they need growth capital funding to support their growth, banks are saying, no, we can't do this and the other. They're not willing to even talk about it. It's about they wanting to safeguard and I guess at their end be compliant with the regulators and hence wanting to ensure that they're doing the right thing without necessarily getting into the nitty-gritties of it. And there is a private capital available. So we are ultimately getting funding sorted out through a Swiss fund. So we're getting the funding solutions, but who's perhaps losing out is A, the bank, B, the shareholders of the bank, and somebody who's actually a private credit lender is ultimately lending perhaps at a higher rate today, but the client is willing to take that and because his growth story is there. So you will actually find entrepreneurs all across the globe who've searched for various sources of capital from all over. And I think UK seems to be lacking on that, grossly. I mean, I'll give you another example of Oak North, which is actually a bank. Rishi Khosla, who's the promoter owner of the bank, actually talks about that when he wanted to raise funding for his own business, Scopal Partners, many years ago, he wouldn't get any funding from UK, and he went over to New York and came back with a $10 million check in a matter of a week. So, that's the kind of funding which is available in a very capitalist oriented market. Whereas you can keep going with a cap in hand and keep asking for money in UK, you won't get it. And that's the
I
problem.
think the US has a very different mentality to business
Yes,
to us, and I think actually the banks, especially the UK banks, are going to actually put themselves in a position where they're just going to be a post box because there's more and more hedge funds. They take risk. Their risk is obviously speculation and the markets. But outside of that, they're diversifying. They're buying up properties. They're buying up companies. They're lending money to entrepreneurs, and they're going to take over the role that we expected the bank to maintain or carry out many years ago. And I think
absolutely.
eventually, especially with the rise of crypto, Bitcoin, and all the other things that are going on with ETFs and what Trump's promoting, eventually I think the banks are really going to sideline themselves.
You're right there. I can't agree more on that. And in fact, I might as well say, and you asked me another question of what's been happening in the industry, and going back in the last 10, 15 years, the impact and influence of ETFs as an asset class has been very, very important. And while in the past and even now, most banks have used a lot of long only fund managers, basically mutual funds in the market in placing diversified portfolios for discretionary or advisory portfolios, the use of ETFs have started to increase. And a lot of thematic ETFs, which we invest into ourselves, looking after things like, and you talked about, Bitcoin, for example, or Web3, the entire ecosystem around that, or cybersecurity, cloud computing, defense as a theme. So these are thematic ETFs which have come in the market. They are low cost, passive investments, or actively managed ETFs, if you may say so, with certain themes. And that's where the markets are moving to. If a fund manager is charging a fee and cannot provide you with returns, what we call in the industry as alpha, better than the market, what's the point of me paying somebody a fee? If the market's giving me 10% and if the fund manager charges me 1%, I should be able to get something better than the market, and it has to be greater than including the fees. So if the market's giving me 10%, which is the beta in the market, I need to be getting 12% at least to me to justify why I should be paying something to this fund manager. If the fund
Yeah, I
manager is
agree.
not providing me an extra return, then might as well simply follow the market and invest in a beta. I mean, there is a SPY ETF, which is of State Street Spider, which is at 3 basis points. Effectively, at 3 cents, you're investing into the market. So why would I be spending, paying $1 to invest in the market? So a lot of people invest in simple products like those ETFs, and you really can't, swim against the waves if you say, no, 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 I want to go long only. There are very few long only fund managers who are actually providing an alpha in the market, providing a better return than the market. So we use a lot of ETFs in our portfolios.
Yeah, no, I agree. Going back to Ray Wealth, obviously your business has been going 6 years. How do you scale and attract clients in this sector at the moment?
So, as I indicated during our talk earlier, I'm only focused on targeting high net worth clients and clients who, to be honest, appreciate what I try to bring to them. So, I'm not only looking after their investments in the portfolios. I look after everything. It's more of a multifamily office. So, basically, I look after their investments. I look after their property loans if they need any, or refinance an
Yeah, no,
existing
I
property.
understand that, but do you not look for new clients at all?
No, no, I do look for new clients, but my sourcing of my new clients, to be perfectly honest, um, is through my Rolodex of cards that I have, and I have quite a few of them already because of my 20 years of work experience in the industry, A, and B, from networks that I have. So I don't do an online marketing campaign or those kind of stuff to
Sure.
advertise in that, because my services are not ones which I'm focusing on somebody bringing me £200,000 of investable wealth. It's not going to be workable for me or for them. I'm not looking to
So you're
target
looking for
hundreds
the
of
elites.
I that's my, if you appreciate what I try to bring to the clients, a slightly more bespoke solutions, slightly high net worth client, because that's what I've been doing for 20 years, handling high net worth clients, private clients. So I know these private clients, having worked in these banks, and they are my clients or were my clients, many of them. And through the networks, I've got lots of lawyers, accountants, property agents, brokers, tax advisors, etc., who are in my network, and I constantly meet them up for drinks, dinner, whatever else, and events, etc. And they may at times have a client who needs a service that I can bring to them, and they introduce me, and so that's generally the way I have progressed on it. And I provide a lot more bespoke service, a lot more personalized service, and consequently my interaction with them is a lot more in terms of man hours, time that I spend. Unlike an IFA where you actually end up meeting your advisor once a year, I would probably be meeting my client probably once a month, if not more.
Well, it
So
sounds
you need
good.
to put in that kind of time and effort with that.
I saw on LinkedIn that you recently did a transaction for a property in Belgravia.
That's right.
Yeah, just as an example, can you talk us through that process?
Yeah, yeah, good one that you brought up. And here you see exactly the kind of stuff that we have done into. So it's a highly complex transaction. The transaction is such that the property was owned by a company, and we have gone ahead and acquired the property through the acquiring the company. So if you acquire the shares of the company, you actually acquire the property. It's all legit, it's overboard. We've been advised by top law firms in the UK, and on that basis, we have progressed on it. So we've got a loan from a private bank for a private client of mine, and we've acquired the shares of a company. Now, having acquired the shares of the company, you don't have to pay stamp duty, land tax. You actually pay only stamp duty because you're acquiring shares, which is obviously much cheaper in the first instance. The second thing is that as we acquired the shares of this company, the owners of this property were actually four sisters and their late mother, and none of them are based in the UK. So we were able to acquire that asset at a substantial discount from the value of what the property should be, at least in our opinion. So we got the property at a quite a considerable discount, and we bought the shares, and consequently we got the property as well. So that's what the transaction was. We got it funded through EFG, which is mentioned in my LinkedIn note as well. So they have provided the funding on it. So it's a great transaction. The client's got a property at a much significant discount from the what the market value should be. We saved a lot of money on stamp duty, land tax, all above the board. No, nothing against that. And then the client's happy because he's got the property. Obviously, EFG is also happy as a bank that they have been able to lend, and so the transaction is gone through now.
Sounds, yeah, it's all interesting stuff. I mean, you must love your job.
Yeah, yeah, absolutely. I've been doing this now for, as I said, 6 years in my own company name, and prior to that, with various private banks. So, it's good. It's growing, and on the private credit side also, that's what we are looking to grow that side of the business, which is separately a very interesting side of the business. So we are looking to lend money in the market. We're looking to even buy loan books as well. We are looking to even lend to lenders, believe it or not, so to banks as well. So we are working
It's
on with the
amazing.
bank. Yeah.
How
So,
many people in your company?
well, we've got four people in my company, so it's a small setup. I'm the main person there. But on the other side, which we've got, which is on two other firms that I'm partner with, where we do the lending business, which is there we've got two other partners. One is ex JP Morgan, the other one is Barclays Capital. So we come with a number of years of experience, having worked with private banks and big institutions, having had the knowledge, experience, and our contacts, both on the private client side and on the institutional side of it. And we try to make the marriage happen, and so we can get the product solutions to our clients.
Fantastic. If you could wave a magic wand and fix one thing in the industry, what would it be and why would it make a difference?
Oh, that's a good one. I would probably want, from my personal perspective, I would probably say a simplified process to approvals for investment advisors, to get more investment advisors approved and the process to be done faster. You've today, even if somebody wants to get regulated and registered with the FCA, it's a 1 year process literally, and there are onerous processes, and there is a cost implication which is much higher, and that results in many people who want to actually be in the industry not coming on and not doing it. So that's one thing which I would want, and if I could do something, whether it is through technology or whether it is through some other manner where it can be done, is to get that sorted out. I think that's where it is. And perhaps, if I may add another one, is about product itself. a lot of these products are available in the market, but tools to analyze them are not easily available. So a lot of people are using AI and other things, Chat GPT and DeepSeek and whatnot, to be able to analyze various products. You want to say, okay, fine, I want to invest in the FTSE 100 market. How do I do it? Which are the products available? Which companies I should be investing in? The analytical tools are coming out now. I don't deny that, but it's still not easily available to everybody. I mean, you got Morningstar, you got some fund set, this, that, and the other, but the analytical tools need to be made more and more easily available, and some level of interest should be ignited amongst people as well to do their own researches also.
I think there's some more tools out there, but I think it's about education, and a lot of people aren't educated in it. And also, I think there's so many tools and different technologies coming out that it can be overwhelming for people that don't have the time to actually study it, because it is a full-time job, understanding what's available and what's not. When
Yes,
you talk about the future of multifamily offices and wealth management, how do you see it changing over the next 5 to 10 years?
I think it is only going to grow. And what is happening is, in the industry, I'm talking about the banking industry, there are a lot of people who do their sort of years in the private banks, maybe 5, 10 years, whatever. They build their network of clients, and many of them go ahead and start to set up their own family offices along with their clients. So I think that will only increase as time goes by. A lot of private bankers who at times get disillusioned with their banks, or find that their progress is stymied because of changes that happened at the senior management level, suddenly find themselves getting a bit lost, and then they say, fine, I might as well set up something on my own. So I think family offices will keep increasing in numbers, so that will continue to happen. I think what will also happen is, as wealth gets accumulated in more hands, earlier we had, obviously going back 100, 200 years ago, maybe it was with, I don't know, I'm just using a rough number, maybe with 1,000 people owning the majority of wealth. But over the time now it's moved from 1,000 to maybe 10,000, and maybe from 10,000 it might become 100,000. So my point being that a lot more wealth will be in the hands of some more people now, and it will result in perhaps more family offices being created, and they are opening every now and then, and not just in the UK or Europe, but also in emerging markets where new wealth is being created, whether it is in China or Singapore or India or Malaysia, Indonesia, etc. All these countries have new wealth being created, new family offices being set up, and more wealth accumulated in the hands of new wealthier people. So yeah, so that will keep happening, and I guess a lot of new products will, I guess, keep coming out in the market as well. So which is good. We need to have more depth and breadth of new products which should be in the market, not just limited to the standard equities, bonds, etc., which we have had for a number of years.
So how do you see client priorities shifting, if shifting at all? And what will separate great family offices from the average?
Good question again. I think the important element of family offices is about transfer of wealth from one generation to another. So as years go by, the younger generation takes over from their parents who have had generated their wealth in perhaps traditional businesses, to doing with real estate or hospitality or care homes or whatever else in the UK, to newer businesses who are more focused in terms of technology and a wider spread, and so they want to do businesses in a slightly different manner. Private clients in the past have perhaps looked at more on a one-to-one basis, looked at people coming and explaining what it is and then actually managing it, whereas the newer generation perhaps, and as I've seen myself, wants to get a lot more involved in the decision making process too. So information sharing is becoming much faster. Again, going back 20, 30 years ago, one was probably transacting using faxes, and these days they want a mobile phone and to be able to trade at 10 o'clock in the night. So I think the importance of technology and speed of services will change as the wealth moves from one generation to another, and that's something which wealth managers need to imbibe in their processes and their sales pitches.
Great. So just going back to AI, which we haven't really touched upon, but do you see it's a big part of processes going forward? Do you think it's actually going to help? I mean, we did touch on it actually about the tools becoming available. You know, they're not freely available now, but there's lots of tools becoming available. Do you think this is something that will be taken up by the industry and, you know,
Yeah, no doubt about it. I mean, AI is here to stay. AI is the new Google, if you like. AI is the new search engine in many ways. So instead of just doing a Google search to find a fund, people are now going to go to AI, whether it is ChatGPT, DeepSeek, or whatever you know they use to be able to get their analysis and reviews done. So it's a resource which is available to every wealth manager or a family office who's looking to use it. So that's definitely going to be there. And AI will definitely help people in reducing the cost because you necessarily don't need to have a manpower to do that, and you can actually rely on AI to do that at a much cheaper price. And but at the same time, I think at least for me at this stage, whatever inputs or outputs I should get from AI, I would like to actually go and do my own research on that. I can't today just rely on AI and say, this is
yeah,
what it
you
should go
need
now.
human intervention, you
You
need
need
to
human
check it
intervention. And
to
at
make
least,
sure it's
yeah,
talking the right language.
correct. So even if it shows something to me, I can't just take it blindly and say, yeah, fine, go ahead and do this, because I'm not 100% sure on it. And also, AI in theory, if you look at it, is always backward looking because AI is a large language model. It's based on what's already available. It is not a model which can actually predict on what might happen in the future. It might use some analytics and stuff, but it can't see all the variables which are there in the market. I mean, whether what's the interest rate going to be, what's a geopolitical issue coming up, whatever is happening in the world. There are so many variables which influence the way a stock performs. It can only look backward and give an information. So as an information gathering tool, as an analytical tool for what's happened in the past, that's great. It works on a lot of data, but it cannot be the only be all and end all. And then ultimately, human beings rely heavily on relationships. So while I can use AI to improve my performance, it cannot, take over my role and say, fine, because I've got AI, then, Rai Wealth Management is not required and let a robot do what it's
No,
doing.
I think AI is there to enhance what you do.
Correct.
It's not there to
Absolutely.
replace anybody. It's there to make everything smoother, more manageable, and hopefully give you a little bit more time to get more done.
Yeah, AI can replace some people in the chain. For example, I mean, in the technology industry itself, it has changed the requirement of coders. So you don't need so many people to do the coding because AI can actually do the coding itself. I mean, I've been sort of listening to various podcasts in other places. India used to produce 250,000 software engineers, which were absorbed in large companies, TCS, Infosys, Wipro, etc. And this year the intake is only 50,000 engineers. That's down 80% intake. Similarly, in the US, Google has actually released to 20,000 engineers. So I'm talking software engineers losing jobs. So AI has resulted in a lot of people losing their jobs, and that will continue to happen where you have a lot of analysis to be done or lot of tasks which can be automated. I won't be surprised if lawyers, accountants lose jobs in UK as well because AI can do very much that same stuff.
Why do you need an accountant to do your tax return? I mean, the reality is, years ago, an accountant was able to play with the numbers and make things look better. Now, they can't do anything because they get fined and reprimanded. So the bottom line is, you put your tax return into AI, perhaps, I don't know, give them all the data and they do it for you.
Correct. And it's going to happen. So it's about a tool which has come in the market and we've got to use it to our advantage and our benefit. And that's how society has progressed over years, isn't it? I mean, we never had Google 20, 30 years ago, and now we've all, incorporated in our lives. We didn't have Google Maps. We've incorporated, we've improved. And
But when I
similarly,
was a
AI,
kid, we had black and white TVs and we didn't even have telephones. I mean,
correct, correct. So all the things are,
cars look like, well, like they did in the old films. It was, things have changed dramatically. If you were starting in business today, what would you do differently? And have you got three pieces of advice to give anyone who's starting out in your area today?
I think if I were to start my business today, I probably say start at a time when you don't have COVID. I started my business when I was in the midst of COVID. It's not the best time to start anything, so that's there. But it just so happened to be so. That's there. I would say get all your get your team along with it. I don't have a big team with me, but if you can actually get the right people, so somebody on the sales side of it, somebody on the investment piece of it, somebody who looks after, and that's my own sort of thought process in my own business, to get the right mix of people to do various things, because one person can't do everything. And as time goes by, that is what I would like to do, is to have my own team of people, each person specialist in an area. While we know everything, but say fine, okay, I've got a loan, you do the loan, you do the insurance, you do something else, so that kind of stuff. So that is there. And
You could delegate some of the long-winded stuff. It would make
yeah, I mean, not only
it'll
that,
give you more time to structure more deals.
correct, exactly. Get more, be in front of more clients, and to get the next client coming in and saying, fine, you do this, that, and the other. You're a specialist in your area, and it does not necessarily need to be a formal arrangement. Even I being all an employee in a company, but you have somebody who's an expert in loans, saying, fine, you do the loans part of it. You're not part of Rai Wealth Management, but you're the expert. We'll be working with you. You're the property sourcer. You do the property arrangement. So working around with 5 different companies, if you like, have a master company on the top, call it whatever it is, consultancy services XYZ, and work with different providers to provide each one their area of forte. Have a centralized pool where we all collect the revenues and share the spoils together. So that's what I would like to do in due course, and that's what I would recommend somebody to do it. But yeah,
Maybe I'll come and work for you. Sounds good.
yeah, exactly. Yeah, so that's how. It is.
So listen, it's been a fantastic. Actually, it's been a fantastic podcast. I've really learned a lot, and I've really enjoyed talking to you and listening to you. So I want to thank you for today's episode of Markets Transformed. We've looked at how multi-family offices have changed, the challenges wealth managers face, and how the future might play out. Abhineet, you've been a star. I want to thank you for sharing with me your thoughts. If people want to connect with you, learn more about yourself and Rai Wealth Management, how can they find you?
So my email ID, I can give that, is Abhineet Rai at raiwm.co.uk. If you want, I can type it out and send it to you. So that's there. And my mobile number is there, which is 07456 010413. Anybody wants to call me can call me, and I'll be happy to take their call.
Okay, I think when we put this podcast out, it'd be good if you could send me your bio.
Yeah, I will do that.
And I can put it at the top of the link.
Lovely. No problem
And
at
then
all. I'll
obviously
send
it'll
that to
help
you.
make people aware of your history, who you are, and how qualified you are to work with them.
Absolutely.
So saying that, I'd like to sign off. I'm Gary Wayne. You can contact me on LinkedIn or at GaryA1SolutionsInternational.com or via my website, which is www.a1solutionsinternational.com.